Wonderful. Thank you so much for making the time. One more time, we are here to have another conversation. We promise that we will always bring you the thought leaders about different conversations. They'll be sharing their thought perspectives on those particular issues right here. And like I said, we are on location. You can hear the voices, you can hear the sounds from across the other side of this particular space at the Kigali Convention Center. As always, my name is Eugene Adangwe. I'm about to have a conversation with Aliou Maiga, who's actually the Regional Industry Director for Financial Institutions Group, and of course at the IFC. Thank you so much for making time to speak to us.
You're welcome.
You're doing a lot of work, especially across Africa, working with different financial institutions, including or particularly the banks. I want us to just start our conversation by trying to understand what brings you to the Africa CEO Forum 2024? What kind of collaborations are you looking to make? What kind of announcements are you planning to make right here at this particular forum?
Thank you very much for having me. And just to add to what you said, I cover the financial sector for Africa at IFC. And I've been doing this for almost 20 years. So I've moved around the continent on the financial sector side.
Yeah.
What brought me here, we are a co-host of the Africa CEO Forum. So every year we come here with a very senior delegation, and I'm part of a delegation. And we meet with clients, with governments, and also with the media to share our views, to discuss new leads, new ideas, and see how we can use those ideas to transform Africa in general.
Interesting. 20 years is not a short while. 2 decades.
Yes.
You've been working with institutions across the continent. A lot has changed within these 20 years.
Absolutely.
Talk to us a bit about how the way you work with these banks has also evolved over time.
Well, I maybe just to throw out some numbers and some developments.
Yeah.
20 years ago, our business in Africa was probably around $500 million to $1 billion a year, and now we do 10 billion a year. So just in terms of sheer size, it has changed a lot. In the financial sector, where our focus is really on financial inclusion and access to credit in many angles, SMEs, gender, climate, and co. In the past 10 years alone, our program has tripled. So we went from roughly 1 billion, to about 3 billion a year.
Yes.
And the impact on our banks have been that they went more and more in areas where they were not, very present, like MSMEs, right?
Yeah.
So 15 years ago, the average SME as part of bank portfolio was around maybe 5-10%. Today, that number is about 15 to 30%, and some are even higher. While it seems small, but if you look at it from a macro perspective, when banks grow their portfolio in MSMEs from 10 to 30% of their loans, it's a very, very large number.
Interesting. But then also the aspect of the cost of financing today becomes a thorny issue, especially with the financial institutions who also have to lend. And that also trickles down to those who actually the end product. Yes.
It's a perennial problem, right? So and just to complete what I was saying about banks, really the technology has changed a lot banking. You are from East Africa, a lot of it started from there. I was in Asia 10 years ago representing IFC in the financial sector. And when we're talking about innovation in the financial, in the financial industry, we're talking about M-Pesa and Equity Bank, right? So, East Africa has been, on the leadership also on that front. The problem of cost is a lot of it is linked to the macro situation of African countries. Of course, when you have, government borrowing a lot domestically, and kind of raising the price of funding, it does have impact on MSMEs. So it's I would say a dilemma, but overall I think things have improved. I can tell you in the mid-2000s when I was visiting Ghana or Nigeria, the rate level were about 20% or above, and then it came down all the way to 14%, right? Now it's back up again because of the macro situation in the world.
Correct.
But it's really, I would say, a trajectory. But our goal is to leverage all the tools we have so that we can get banks to lend more on the to the real economy and to businesses, instead of parking half of their assets into government papers. So it's a trajectory. It gets affected by global developments, but overall, I think the trend is positive.
I like your optimism. The trend
Always.
is positive.
Always.
However, on the other side, or on the flip side, FDI is dwindling in one way or another due to the global shocks that we are seeing. I want to hear your thoughts, especially your advice, or what you'd be able to speak to, especially on the aspect of making the African capital markets more efficient, to become, sources of support for SMEs. What role is IFC doing to see to it that this is actually comes to fruition?
No, IFC has been doing a lot. Of course, we help banks fund MSMEs on the primary side, but in some cases we help banks also securitize their MSME portfolios. But ultimately, I think economies are more stable and more shielded from global imbalances and global volatility when they fund themselves domestically, which means through savings from the population or through investments from the pension funds and insurance companies in the local economy.
Yeah.
And more we support that trend. 5 years ago or 6 years ago, we launched something called JCAP, Joint Capital Market Development, a joint IFC and World Bank initiative, through which we help many countries, review regulations, improve regulations, so that we can do more capital market transactions. And more IFC itself does a lot of local currency transactions, and that takes us to the next level, which is really to get all the participants of the market to come together to see how we can bring down the cost to access capital market to corporations, so that they can go more and more to capital market and not only to banks. So again, it's an effort, and many things in the world takes time. To build capacity in a market takes time, and I think nothing worthwhile happens overnight, but if we come together we can accelerate the process. So I think we are there, and we do a lot of interesting transactions. Just this year in Tanzania, we supported 2 banks to issue green bond or social bonds, and that's quite an innovation in a country like Tanzania, where if you go back 10 years ago, the banking sector was not as advanced as Kenya, but in 10 years they caught up a lot. So to do those 2 transactions in the markets and a number of innovations, is a sign that the capital market are really also evolving. And these are dual currency operations where you have a domestic tranche and a foreign tranche, and it was oversubscribed by maybe 2-3 times. So it's really successful transactions.
Very, very interesting indeed. You mentioned something that is really interesting when you talked about, it's a upward growth trajectory that will take time. Much as a lot of people are saying, we do not have that time, we want it now. But you mentioned something else interesting that probably might fast track this process, and that is partnerships.
Yeah.
When you came to this particular forum, and even as you co-organized this particular forum, we know that the mix of the people attending the Africa CEO Forum includes also policymakers, government leaders, and representatives. And we know that one of the challenges that has affected SMEs in their growth is the lack of a proper SME strategy when it comes to government leadership in that sense.
Yeah.
What is it that this forum today is going to be looking at to ensure that we're leaving this place with SMEs feeling a bit better, that probably there's a spark that has been ignited to their government leaders attending this forum to be able to start creating that kind of environment to create a proper ecosystem for them?
Yeah, the first panel of this forum started with my boss who was on the panel, and he said a word that we use a lot recently: solutions. Bringing money only is not the solution, but leveraging technology to solve actual problems that is standing in the way of including MSMEs or including agriculture, for example, in the financial sector. Today you have technology that can allow us to do that much faster and at larger scale. So to me, if you wait for policy to be perfect, then you will not go fast enough. If you look at how market develop in the US, people use the loophole of policy, and then policy adjust to that. So what I'm saying is, yes, we work on the policy aspects, including with our partners like the World Bank and IMF. At the same time, we try to leverage technology to do things that are not possible in the current policy environment that can actually unlock a lot more while we have the work going on to improve policy. So like he said, technology really have to be leveraged in a very practical way to solve problem that seems unsolvable, but actually if you look at what's happening in the tech world today, it is possible. One area, and our MD mentioned agriculture. People look at agriculture as a business of farmers and maybe, fertilizers and co.
Yeah.
But if you look at what technology has done to finance 40, 50 years ago,
yeah,
and what it has done to manufacturing, 10, 20 years ago, now you go to a car manufacturing plant, all you see are robots. Very few people in many plants. There is a technology today that can allow, can actually bring the risk in financing agriculture and bring also the cost down while improving yield that enough and those combinations actually can bring agriculture financing under commercial umbrella, which means can be financed by commercial banks profitably. And those innovations are happening, and we are trying to see how we can work with banks and governments to accelerate the scale up of those technologies.
Yeah.
Because Africa will not solve its problems if it cannot feed itself. And it has the land, it has the people, it has the everything. It's just a matter of trying to make it efficient. And while you build capacity in people, you can leverage technology to build efficiency as people, also build their capacity.
Yeah, it's interesting, but some argue that it's a two-edged sword.
Yeah.
As you give or build capacity within the agri-tech space, there are those who still have the fears lingering in their minds about the future of their ordinary day-to-day jobs that technology could be able to come and take. Just talk to us a bit about how you're striking a balance in this, ensuring that, much as that agri-tech is coming, the tech usage in terms of, using tech to do what probably before was being done by human capacity and hands, what is the strategy in ensuring that there is proper skilling and we're not leaving anyone out?
On the contrary, I think this is working with existing farmers to help them learn better farming techniques, to help them improve their yield, to help them insure themselves against weather risk, to help them secure market access so that banks can lend to them. So we're not displacing those people.
Mm-hmm, mm-hmm.
In fact, we are improving their condition of living and improving their jobs, because once you inject technology into an activity, it becomes more exciting. That's first thing. Second, you improve their income.
Yeah.
If you improve their income, they can invest better in their families, in their kids, in their health. Okay? Third, technology itself cannot be everything. So for every technology that we put behind, there are people on the ground who actually support those farmers. So you're talking about roughly one job created for every 100 hectares you cover. So just imagine, if you want to cover 1 million, you create 10,000 jobs. You want to cover 100 million hectares, you're creating, 10 million, 100,000 jobs. So this is really not displacing anything. I know there is the fear of the AI discourse and all of that, but I don't think on the agriculture side, what we are trying to do is to improve agriculture with this existing land, existing farm, and existing people so that they can produce better, make more income, and be more secure in their life.
Right. Very interesting. And I want us now, before I let you go, to talk about something that IFC has also been doing or working around. And it has to do with what we've witnessed across the region, over the last few weeks. Yeah. And that has been the climatic conditions that have been harsh. We've seen a lot of flooding across Kenya. We've seen in Tanzania. And we're talking about climate financing or green financing, which is is now a buzzword. Talk to us a bit about the strategies that we are about to see. Any shifts in trying to rework the aspect of catalyzing through financing, adaptability or climate change related financing?
Now, climate has been on our agenda for the past decade, before it even became this prominent in the news. So there are a number of things that we are doing. First, really defining all the standards and policies in climate, right? Green bonds, for example, were created with IFC's leadership. And most of the solar markets, IFC has been a precursor through what we call the Scaling Solar Program, which for the first time showed that if you structure properly a transaction, you can build solar plant that produce electricity at less than 5 cents per kilowatt hour. This was like 10 years ago.
Yeah.
So we lead. We have been in the leading seat in really shaping markets. More recently, we launched what we call net zero. I think 30 by 30, which is really to bring countries, not only our client, but countries, through working with policymakers, regulators, and the local market to build that capacity, define regulations and standards so that they can invest more and more in green assets. Just to give you some numbers, I think in the past year, only the financial sector side of IFC in Africa has done more than 1 billion in green financing through banks. Just the financial sector.
Yeah.
So we are doing everything we can to really help the continent transition towards a green economy or a sustainable economy, because, like we said, what we are seeing today in terms of flood, heat, and everything is just not sustainable. And unless we find a way to help the continent transition over a period of time, we're going to have the same issues. So this is really at the forefront of what we do, and we do it not only at policy level, at market level, but also at client level.
I want to let you go, and I want to ask you to just take an advantage of this opportunity to share with us any big announcements that we should expect at this Africa CEO Forum from IFC, from the region you represent, and then also how do we ensure that whatever we'll discuss from this forum does not go as a missed opportunity, that we actually get something out of here?
Well, I will let the primer of big announcement to my bosses, because I don't want to preempt them, but there will be announcements in terms of amount, in terms of transaction being signed.
Yeah.
That will come. But like I said, I'm a practitioner of development finance. This is an opportunity to meet clients here, but our work is ongoing on a daily basis. We always try to listen to countries, what do they need, and how the private sector can really help countries develop and prosper, and how we can also collaborate with government so that they can improve the environment to enable that. So that's really my take. We are always on the move.
Always on the move. Aliou, thank you so much for making the time. And I want you to be now on the move. I know I've stopped you for moving around. All the best.
Thank you, sir.
Take good care of yourself.
Thank you very much.
Asante.